Jim, let's talk about some of the lessons that we've learned in Action Alerts. And I want to bring up Bed Bath & Beyond because that stock, it's had a wild last year for sure. And we've been involved in it in the past. We are no longer involved now. But we liked it. We should have stuck with our conviction. We let the market and the sentiment get to us, and it's not necessarily something you want to do as a portfolio manager.
Right. I mean, one of the points of get rich carefully is I figured, you know what, I've been around for 35 years. You're a seasoned pro. We can start admitting our mistakes rather than just pretending that we were early or we got it wrong. And you and I knew that Bed Bath was too cheap at a certain point. Remember, these are all relative issues because Bed Bath could subsequently a year later not do that well. But we listened to analysts really just say negative things and negative things, negative things. But our work said that things were positive. In the end, we could not take it anymore. Now, we managed to be able to trade around a little bit. But Stephanie, the idea of not being able to take it anymore, Union Pacific, not being able to take it anymore, Bank of America, not being able to take it anymore, Bed Bath, that is a bad reason to sell.
Absolutely. And you have to think a little bit more longer term.
Right.
A lot of people are thinking short term. A lot of day traders these days. Action Alerts is really a longer term product that we're trying to educate, but sometimes we get trumped up too.
Right, and I think that what was really difficult about Bed Bath, which of course I've not been back to since we got out of it, and it was, you know, Harmon and Bed Bath, the two places I'd love to go with my daughter, is that we kept hearing it was being Amazoned. And it now maybe subsequently a lot of stores have been Amazoned. I mean, Howard Schultz has talked about that on Starbucks, but the truth was it wasn't being Amazoned. It was actually doing quite well. And more importantly, you and I know the game, it's expectations. Expectations got so low that Bed Bath, even though just doing a kind of an okay number, shot up. We understand that. We've got to be more patient. People have to take away. People should be more patient. And if you believe, then stick around. I have to mention because it's post-book. But Union Pacific. I loved Union Pacific. You loved it. And then they pre-announced what was basically a bad quarter. And it came back a little bit from that, and we decided, you know, cut our losses. But you know what? It was a short-term negative. And then the stock came all the way back. Our original work was right, Bed Bath.
That's
and
right.
our original work was right, Union Pacific. Don't lose sight of the fact that sometimes your original work is what you should base your convictions on.
That's right. Stick with your convictions. Thanks, Jim.
To get more of the lessons Jim and Stephanie have learned from managing their $3 million charitable trust portfolio, sign up for Action Alerts Plus. If you subscribe, you'll get a free signed copy of his new book, Get Rich Carefully, as a thank you. Sign up for Action Alerts Plus at actionalertsplus.com.